We have to talk about Tesla and Elon Musk. And I know you just had a conversation on Twitter X. This has been, I think, from day one, right? In terms of you starting out, that you've had this investment in Tesla. And I remember when we first talked and you were getting started, you talked about him being the next Thomas Edison and how his vehicles would turn the U.S. economy upside down. Having said that, there's an evolution and the EV world has changed. How are you thinking? It's still a top holding. How are you thinking about the Tesla story right now?
Well, first of all, Carol, thank you very much for letting me interview that time. That was nearly 10 years ago. ARC is about to celebrate its 10th year anniversary, and you gave us that opportunity, so thank you. The world is evolving, actually, I think, even more closely to what we expected. Because we expected a lot of traditional auto manufacturers to see the writing on the wall and rush as quickly as they could into scaling big time into electric vehicles. And what has happened recently? Both GM and Ford have said, we're stepping back. We're not going to do this until it's profitable. The problem with that is, in order to be profitable, they need to scale. That's how this works. These are learning curves that they are riding down, and those are expressed in cost decline. So the fact that they're pulling back means there's more share for Tesla and others who choose to go for it.
And Cathie, I want to keep the
Elon, you have been great at, I think, standing up to short-term oriented shareholders. That's one of the scores in our scoring system as we're evaluating companies. Is this a visionary management? And will they stand up to short-term shareholders who want their profits now, their dividends, their share repurchases? Will they invest aggressively enough in the future? And I think you've done a great job.
Well, thank you. And credit to the Tesla team as well. So, but that said, at Tesla, we do go to great lengths to ensure that our quarter is good, that we don't disappoint. Because it's not so much about it's just that we feel like we have a sort of moral obligation to, to not have a bad quarter and disappoint people. So the number of New Year's Eves that I've spent in delivery centers is like, 6, 7, I've lost count how many times I was delivering cars until like basically midnight on New Year's Eve personally.
Has it done let me just ask the question the other way. At SpaceX, you feel like you have more degrees of freedom. Being public, has it done anything positive for you, for Tesla?
It did allow us to clean up our capital structure, which was overly complex as a private company, and have a single class of common. So we were really things were getting quite unwieldy with the private company capital structure. There was obviously the capital availability in the public markets, which is a lot more than in private markets. And a car company is capital intensive. So I guess access to large amounts of capital and cleaning up what had become an extremely complex private company share structure were two major things. Certainly, it was also good to give access to the company stock to small shareholders. So those are good things. But I think it's also been a tremendous distraction as well on the downside. And there's just a lot of overheads. There's more time that's required to manage a public company than a private company.
The EV market is undoubtedly becoming more competitive, but for Tesla fans and investors, there's no need to panic. In fact, Cathie Wood recently reassured investors that Tesla will continue to be a profitable automaker. Tesla has led the EV industry for years and will need to keep outselling its competitors while maintaining its high margins in order to stay ahead of other electric car companies.
All the companies across all the years, I've never lost money for an investor even once. And this is now over 100 financing rounds. Now, of course, I cannot stop people from selling when they should not sell, but I have never driven them to a bad outcome. So that's pretty good. And obviously, when you've treated capital well, then capital it treats you well in turn. And so it's basically very easy for me to raise almost any amount of capital, frankly. Now, of course, I need to make sure that track record stays intact and not get complacent or entitled. But obviously, I do not have a need to raise capital. And in fact, in most cases, I don't really need, even for, say, like Boring Company or Neuralink, I could just fund it myself entirely. But I think it is good to have other investors.
Why even bother with outside shareholders at all? It'd be simpler you could take whatever risk you want without having to answer it to anybody.
Well, I do take a lot of risks either way. I don't know. I think it's good to have. I think it's good to have other investors. I think that each investor you add is an ally. It's good to have more allies. I think it also establishes that I'm not delusional in the valuation of the companies. So if others are prepared to invest at a particular value, then I'm not the sole decider of what the value of the company is. Others are deciding what the value of the companies are. It's sort of an assessment of the value of the company. And there is also a need to provide liquidity to people at the company. So I believe in providing stock to the people at the company, the employees and creators of the company. It's important to provide them stock to have the incentive be aligned with the company outcome. And then they at various points want to gain liquidity, so that you want to then establish an outside valuation, and so it's not just me deciding it, and enable liquidity for those who've been awarded stock and options at the companies. And it's generally been my approach to award everyone at the company stock. At Tesla, we awarded everyone stock, no matter how junior they were. So that actually obviously made a lot of people millionaires. I think Tesla may have created more employee millionaires than any company in history.
Yeah.
So I would say, like, if there's a company that's created more employee millionaires than Tesla, there's one or two others, but really the sheer Tesla's around 140,000 people, and I think we might be number one. So.
I think you are.
For the first time in 8 months, Cathie Wood recently purchased Tesla shares, and many investors are discussing her purchase. One of the most well-known and contentious stocks on the market, Tesla has seen tremendous growth this year despite struggling to sustain its pace in the face of regulatory obstacles and heightened competition. Since Cathie Wood is a major fan of Tesla and is well known for placing audacious and visionary wagers on disruptive technologies, her recent purchase of Tesla shares indicates that she is still bullish about the automaker and still anticipates higher Tesla stock prices in the future. But why did Cathie Wood purchase Tesla shares at this time? And what does she think the company will achieve in the long run? Let's find out.
Me back to early 2019, we were at Fremont doing a podcast with you when, remember when Tesla was in production hell with the Model 3, and I think you were sleeping under your desk at that time. And you gave us a lot of time to really help us understand this story and what was going to happen, and the rest is history. So just wanted to recount that. Elon, you're so often, the media is focused on controversy, and that's how they get their clicks and hits and all of that stuff. But
I think they sort of actually don't really have much of a choice, in that any media that isn't focused on controversy and is not maximizing the clicks is going to get outcompeted by media that does maximize the clicks. So we also can't entirely blame them in that they're trying to survive in what is clearly a declining legacy media market. And shrinking pie. It's a shrinking pie, and shrinking pie, desperate times lead to desperate measures, and that's somewhat, frankly, predictable.
Yes. Well, that's not what we're about at ARC. We're all about the future, trying to figure out the way the world's going to work. And well, I'd love to give you an opportunity right now to address what you think mainstream media does not understand, because there's such a big story here. There's so many big stories that offer all kinds of hope and really transformation in the future, and you're leading the charge. So what don't they get, do you think?
Well, I think that's quite a long list of things that don't understand, or where they simply don't wish to focus on, because it doesn't quite lead to clicks and traffic, whatnot. I could go over at a high level what SpaceX and Tesla are accomplishing or have accomplished this year.
You just said that, like, media is a dwindling pie and you own a big kind of like media platform franchise. How do you think about the future of X within that context, and how it should evolve?
X is actually growing in traffic. So, I mean, again, one doesn't know quite what to believe, but when you look at the traffic numbers, the traditional media is down, but X is up. So I think that's cause for optimism. But of course, the traditional media would never actually write a story about that. And not going to write a story that says, hey, we're losing and X is winning, is a very unlikely headline. In fact, you see the opposite headlines, which are quite misleading, that FK, Twitter, is dying or dead or whatever. I mean, how many times have we seen that headline? It's getting a little tedious. I mean, you can just repost the same thing every month is what was.
Due to its stable finances, Tesla has been able to expand into new markets and make significant investments in production facilities and other growth efforts, which have strengthened its position as the industry leader. Tesla is predicted to totally dominate the industry, and this revolution may be closer than you think. The company's reach goes far beyond its headquarters, as evidenced by its efforts to expand globally and capture international markets. Hi everyone, and thank you for returning to Savvy Tesla. One of the most prominent investors in the tech industry is Cathie Wood, the founder and CEO of ARK Invest. She is well known for her optimistic view on Tesla and has been predicting for the past 8 months that the company's stock price might reach $2,500 by 2027. Cathie Wood has been selling Tesla shares from her flagship fund, a move that has puzzled some investors who wondered if Wood was losing confidence in Tesla's growth prospects. However, it appears that Cathie Wood was simply taking advantage of Tesla's volatility and trimming its weight in her portfolio to maintain diversification. In December, the stock expert surprised the market by buying Tesla shares for the first time in 8 months. And interestingly, this decision came amid a challenging market environment, even as Tesla faced a possible recall of its vehicles due to potential suspension issues. So why did Cathie Wood buy Tesla shares after months of selling? Let's find out. But before we do, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. There are several possible reasons for sours to narrate season. Cathie Wood's change of strategy: 1 is that she saw opportunity to buy Tesla at a lower price as the stock had dropped more than 15 from its all-time high of $299 to $29.29 in November. And another could be that Cathie Wood was impressed by Tesla's strong performance in China, where it reported a 35% in sales in November compared to October. One of Tesla's key strategies in holding a significant portion of the EV market is its diverse and compelling product lineup, from the Model S to the Model I. Each vehicle showcases Tesla's commitment to performance, range, and unparalleled driving experience. Actually, Tesla's name is now synonymous with cutting-edge technology and electric cars, and the company's success in building a strong and aspirational brand image has been important in drawing in a devoted and steadily expanding clientele. Fortunately, a lot of analysts and stock investors continue to believe that Tesla will eventually beat the market despite the recent market limitations. In fact, based on the automaker's current results, it's evident that Tesla's journey is far from done.